Welcome to Module 2 of our Smart Money Concepts Trading tutorial. If you've made it this far, congratulations. You're already smarter than 90% of retail traders. Today we're going to dive into some key concepts that are the bread and butter of SMC trading. Think of them as the secret sauce that makes your trading extra tasty. By the end of this session, you'll know all about order blocks, liquidity, fair value gaps, and institutional order flow. These are the tools that smart money traders use to navigate the market. And by smart money, I don't mean the guy who always wins at poker night. Let's get started. Section 1. Order blocks. First up, let's talk about order blocks. Order blocks are like the VIP sections of the market. It's where all the big institutions hang out, making it rain with their large orders. Meanwhile, retail traders like us are just trying to get past the bouncer. So how do you identify an order block? Picture this. It's the last bearish candle before a bullish party, or the last bullish candle before a bearish hangover. These candles mark the spot where institutions likely got in on the action, leaving their footprints behind. Here is the example. In a bullish scenario, the order block is the last down candle before the market moves up. In a bearish scenario, it's the last up candle before the market drops. And just like at a party, once the VIPs are in, the crowd usually follows. Price often retraces to these zones before continuing in the intended direction. So if you want to rub elbows with the big players, keep an eye on those order blocks. Section 2. Liquidity. Next, let's dive into liquidity. Liquidity in the market is like the candy at a piñata party. Everyone wants it, and the big kids, aka institutions, usually get to it first. Liquidity is where the money is, literally. It resides above or below key levels like swing highs and lows, where retail traders typically stash their stop losses, thinking they're safe. Spoiler alert, they're not. Institutions love these liquidity pools. They target them like a kid on Halloween, grabbing all the goodies before the rest of us even realize what's happening. This is why you'll often see sudden spikes or drops in price. Those are the institutions cleaning out the liquidity before making their next move. By identifying where liquidity is resting, you can avoid being that unfortunate trader who just had their stop loss hit, and instead position yourself to ride the wave with the big players. Section 3. Fair value gaps. Now let's talk about fair value gaps, or FVGs. Fair value gaps are like the potholes on the road of the market. They occur when there's a sharp move in one direction, leaving a gap between the high of one candle and the low of the next. This gap is a sign that not all orders were filled, which means the market's got some unfinished business. In SMC trading, we expect price to go back and fill these gaps, kind of like the market's way of saying, "Oops, let me fix that real quick." So if you see a fair value gap during a strong trend, there's a good chance price will revisit that area before continuing on its merry way. Trading fair value gaps can be as satisfying as finding loose change in your couch cushions, small but rewarding. And when you align them with other SMC concepts like order blocks and liquidity, you're really in business. Section 4. Institutional order flow. Lastly, let's touch on institutional order flow. Institutional order flow is like the current in a river. If you try to swim against it, you're going to have a bad time. But if you go with the flow, you'll glide smoothly along. Institutions have the power to move markets, so it's crucial to recognize the direction they're pushing things. Spotting institutional order flow is like being the first one to know about a surprise party. You get to show up early, grab the best snacks, and position yourself before everyone else arrives. When you combine the understanding of order blocks, liquidity, fair value gaps, and institutional order flow, you're not just attending the market's party, you're helping to plan it. To recap, in this module, we've covered the 4 key concepts of SMC trading: order blocks, the VIP sections of the market; liquidity, the candy that institutions grab from key levels; fair value gaps, the potholes that the market needs to fill; institutional order flow, the current that you don't want to swim against. These concepts are your ticket to trading like the big players. So next time you're analyzing a chart, remember to look for these signs. It's like having a treasure map in the world of trading. In the next module, we'll put all these pieces together and create some actionable trading strategies. It's like cooking a gourmet meal, but with pips instead of pasta. See you there.